Welcome back to the channel. I'm going to do something slightly different today. I'm just going to be doing market cipher breakdown. I want to do maybe 3 or 4 parts to this. Short, snappy videos about what this is at the bottom, why I use it, what it does, how to use it, any sort of questions. We'll just get straight to it. But obviously first we'll check out the trade that we hit yesterday. Hit the final TP in the end, which is pretty nice. Go into the Discord, VIP signals. We've got the entry here, the triggers, and then just today, well now yesterday, it's just turned midnight. Yeah, final TP yesterday signal, 319%, didn't leave much in for that runner, but still a good trade. We were looking for shorts above the all-time high, that blue line. I didn't actually enter a trade, but we did reject it pretty decently. Got some bearish divergences coming in. The reason I didn't enter because the money flow was still quite green. Cipher. So we're going to use this on the, we'll go 4 hour. And we'll just go back. And what we're going to do is put a replay on. Where are we? 23. That's fine. Put the replay on and sort of break down what this is at the bottom. So this episode 1, we're going to be focusing on the momentum waves. First thing we want to do is go to indicator. And VMC, I'm going to use VMC Cipher B because it's the free version. But if you want to get the actual version, it's market Cipher B. I'm not too sure which of the. I think you have to subscribe, and it's like a different thing. But there's no point paying for it if you can get it for free. And just for the purpose of this video, I'm going to turn everything off apart from these wave trends. I'll keep them on. Actually, I need them. Can't fucking click RSI. Take them off for now, take that, that. I want to get everything out of this. Keep them. I'll get rid of this VWAP as well. VWAP. Perfect. So now we've just got these waves. In general, these waves are sort of an indication to the trend. So if I get a pen out here, we've got as the price came from the low here to the high, when it crossed the 0 line just there, see where that was in price. That was literally the bottom, well not far off the bottom at least, but we had that big spike up. Same when it goes down as well. So you've got the momentum, got a chunk of momentum there crossing down. See when it crosses here on the chart, that's right there. So you want to aim for a short there, when it crosses up, aim for a long there. See, both of them positions on the 4 hour would have been pretty good. The basis of using this, let me just get rid of these drawings, is you've got a lowest point. So for example, let's go to make it a bit easier here on the indicator. I'm just going to split this half, make that a bit bigger. We'll zoom in a bit more as well. So you see here, the lowest point here, this is an anchor wave. Let me circle it. That there, anchor wave. This is because this is broken that low wave there, came up, broken down below it, created a low point. So anything that's above this, for example here, or here, is a trigger wave to this anchor wave. So these are going to be the places you'll be looking for entries. Obviously you came up again here, you've technically got an anchor there. So this is going to be a trigger wave for this and for this, making it a bit more stronger, and vice versa. You've got then an anchor wave because it comes a bit lower than that one, and then a trigger wave for that, and that. So this here, obviously you can see on the chart anyway, was a prime little buying point right there. So you can buy and price shoots up. I'm going to cover divergences in this one as well. I was planning to do it on a separate video, but it kind of fits if we're just using momentum. So what divergences are is, let me try and find a clear example on the chart spot. I'll just go for this one for now. We'll go down to a 2 hour. Don't actually know where I was because I've just back checked it all, but here we go. We've got a low there. We'll take that divergence. So basically what a divergence is when the price does the opposite to the indicator. So for example, in this situation here, we've got this low, which is this low, these two, and the momentum is coming up while the price is coming down. That's an indication that you've got momentum coming into the price while price is going lower. So if momentum's coming in and price is going lower, you can expect price to push higher. The best place to look for these really would be it's the 618 Fibonacci along with other key levels, but if you're going to just keep it simple to the 618 fib. So in this example, draw the fib, wait to get down to this level, look, see if there's a divergence and enter off the divergence. We'll find a little bearish example as well. Obviously you can see they don't work every time, that's just the nature of trading. They're not going to work every single time, that's why you use it in confluence with other things. We've got, let's have a look, here's a local one, so here's a very local one. We've got the price again going up, making a high, and then you've got momentum coming down, creating that anchor wave and the trigger wave even lower. You'll be looking to enter here, so if we go onto the chart here, alright, let's go for 15 minutes. So you can see as that's happened, as we've came up, create that high and the divergence in the high time frames, what we've started to do is we started to get these trigger waves. We started to get an anchor up here, trigger, anchor, trigger, but by the time we've got to that red dot, if I just mark where that is quickly, vertical line, where the fuck is it? I'm blind, there it is. So the red dot printed there, so anytime after there on the 15 minutes, real time, this is where we'll be looking for entries. So you could take an entry while the momentum is above, you want to be looking at the red dots, while it's below you want to be looking at the green dots. Because if momentum's above, you see a green dot, in my opinion, you don't really want to be looking at taking them. They can work, don't get me wrong, because the momentum is coming to the upside, but you want momentum to be magneted towards the upside rather than magneted towards the downside. If it's on the upside, it's likely it's going to start heading towards the downhill, but as you can see, it always keeps crossing. So if we look at this area here, we're looking at the red dots that are above the blue level. So let me change this colour a bit to a red line. And again, here. So they're the two sell opportunities that we've got in that area. Obviously you can use the lower time frames, do the same thing again. But after the fact, that's the general place. So just to put this into perspective, I'm going to use bar replay on a 2-hour time frame and just look to see what prices are going to do. I'm not going to take an entry, I'll look to see what price is going to do. So right now I've got momentum on the lower side with a green dot, so it's going to be magneted towards the upside, which obviously it's already done. So I either want to see price come lower and break this low but not break this low, or if we go to the upside we could possibly look for a red dot on the higher time frame. So we're pumping to the upside right now. So when we start to get that red dot, we've broken this high, broken that high there with a wick, momentum still on the upside, but it's lower than this one. So this is the anchor, trigger, trigger, or even then that's an anchor and then trigger. It's going to be confusing, but you get the general idea. Anchor, trigger, trigger. That's technically an anchor to these, but a trigger to that. It cross confuses itself, but you want to keep it simple. Just look for the highest point, and if anything that's lower than the highest point, you're good. Or lowest point, anything higher than the lowest point, and then you're good. So next time we get a red dot on this. So in real time, obviously we're on 2 hour, we're waiting for that red dot to be printed. So once that 2 hour candle closes, like that, that's fine. Now we go on the 1 hour. Check that 1 hour, 1 hour still looking alright. 15 minutes. See, momentum's on the bottom side right now, so we want to wait for a push up and a red dot before we look for an entry. See this red dot here would be good for an entry. As I said, I'm not using any confluences at all, just literally using not even half of the indicator. But this is an example where you could get in. We've got that divergence, we've got price wanting to come down, momentum, creating an anchor, then a trigger, red dot. Everything doesn't look too bad, so we'll see how this plays out. See, we came up a bit first. See, after that first red dot here, we just went up a bit and created another red dot. So there's no problem with that at all. If we go into a lower time frame, if it allows me, it won't allow me. Might be able to squeeze a 12 minute. That's more than likely a divergence on the lower time frames. I can't guarantee and say that it is, but it's more than likely. Yeah, it depends if you can get down to the lower time frames, but we can't really go lower than 10, I don't think. So as you see in there, that example played out beautifully. So that was just a quick little introduction to market Cipher, the momentum waves anyway. Next time I'm on, we're probably going to go through the money flow. So next we're going over this. This is almost the most important part of the indicator. I'm not going to get into it now, but it's very, very important to use with momentum. Using these two together, you can literally just use them two to trade. You might not even have to look at the chart sort of thing, but yeah, no, safe for that. And I'll see you in the